Big box retailers soar, but how resilient is the US shopper? Welcome to Market Insights. I'm Peter Devlin. Target ended an over year-long run of sales declines this quarter as price cuts attracted more shoppers, while Walmart's strong second quarter results last week suggested good times ahead for the company. But are these brick-and-mortar giants a solid proxy for the US consumer? Joining me now to talk about all that is Keith Gangl, Portfolio Manager at Gradient Investments. Welcome, Keith. So both Target and Walmart raised their full-year guidance. In contrast, we saw Macy's and Home Depot struggling this quarter. So what does this overall tell us about the US consumer?
Yeah, I think the consumer is still spending, but the consumer is getting a lot more selective. So they're buying, they're looking for the values, and that's exactly what Walmart offers and Target offers. Like you mentioned, both of them had excellent quarters. This is the first time we've seen a positive comp out of Target for quite a while, a 2% comp. That's great when expectations were a little lower than that. And again, if you go back a year, they're down at 5% comp. So it's nice to see that they're reaccelerating. And again, the consumer is looking for value, and that's exactly what Target's offering. And certainly what we saw at Walmart last week as well. Stock acted very well. They had a 4% comp. So again, both those retailers, large box guys, are doing very well, unlike some of the other competitors you talked about.
So turning to politics as well, Kamala Harris outlined a plan last week to ban price gouging on food and groceries. So how could a Harris administration affect those big retailers?
Yeah, I think that's more campaign rhetoric. We're not sure how they'd actually implement a ban on price gouging. And again, if you look at history, that hasn't gone well for countries that have done it. If you look at Venezuela, they did it with food and energy, and that ended up causing their economy to spiral into economic recession. So I don't think that's realistic. It's a very low probability that happens. Again, I think that's more rhetoric. Sounds good, but in reality, how would you even implement that or regulate it again? So again, I think that's a low probability. And for us looking at the stock market, we're not too concerned about it at this point in time.
A broader view on the economy as well. Flash PMIs due up tomorrow. Last month, we saw businesses struggling, sustaining higher prices amid resistance from the US consumer. So what can we expect tomorrow?
Yeah, we'll look at the survey work. There'll be two different numbers coming out. We'll look at the manufacturing numbers. That's going to be right around that 50. I think 49 is where the expectations are. Anything below 50 is kind of a contraction in the overall economy. Now, on the service side, we're looking for a 54 number again. So that means the economy is growing. So that'll actually, kind of parlay into what the Fed, on Jackson Hole on Friday as well.
So a strong retail sales print in July did allay recession fears. You mentioned Jackson Hole there on Friday. What do you expect to hear from Powell?
Yeah, we'll see if he gives a little more color on what kind of the inflation cut will be, or interest rates cut, will be. Expectations are now about 65% probability of a 25 basis point cut, a 35% probability of a 50 basis point cut. So the market is pricing in a cut. So we'll see what the Fed has to say, especially Powell, what expectations are. So I think if he hints at that labor market's getting a little softer, that could lean towards a 50 basis point. And if he talks about maybe inflation being on the glide path at 2%, then we're back at the 25 basis point cut. So it'll be very interesting what Paul has to say at this coming meeting.
Keith Gangl at Gradient Investments. Thank you very much for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.